This is a download from BFM 89.9, the business station.
Good morning, Dodge. Now that we've had the weekend to digest this news, what do you see as the immediate and long-term economic implications for the UK and the EU?
Well, good morning, Melissa. For the UK, there are some positives. For Europe, it depends on how they handle the Brexit. And for the world, I suspect that there's going to be slower growth. I don't expect that there will be a global recession because of this, although that's what we've been hearing. The world's two largest economies, the U.S. and China, are seeing growth slow, but will still stay comparatively strong. So as we get further away from the actual news last Friday, I think the shock will wear off. It will subside. Britain's relationship with the European Union will look similar to what it is now. A few changes to maybe immigration and payments to the EU, yes. But Britain will have more control over the process. And then the real debate, Melissa, is does the EU try to get through to the invocation of the actual exit quickly in order to avoid other countries doing the same, or does London try to stabilize first and then take its time before it actually invokes the negotiations?
What do you think, Dodge? I mean, do you think it's going to be a quick process or a very slow, messy divorce?
No, I don't think it's going to be quick. I do think it's going to take time. I think there's going to be a lot going on. And in the meantime, I think the markets are going to be very volatile. I think the initial shock will subside. It really depends, Melissa, from what I'm hearing, that there's a possibility that the UK may try to come up with a weakening of this indication that they want to leave. If that happens, the market may actually rise this week, but if it rises, it's much too soon. This is not an overnight affair. If we have a rise in our markets this week and a revaluing of gold, then I suspect that there'll be another short coming up. I think over the summer, we're going to see more volatility with the leaning towards the downside, and then in the fall, depending on how far we go, I think then you'll start to see a tradable bounce.
Dodge, what about concerns that the Brexit threatens Eurozone stability? Are you concerned that there could be contagion, that other countries could look at this and think that they too want independence from the EU?
Yes, there is a possibility of contagion, and yes, other countries are going to look at this as an opportunity. I mean, you take a look, from what I understand, Spain's two main progressive parties, the 137-year-old socialists, and also the anti-establishment group Podemos. They probably have won a majority of seats in Parliament in Sunday's election. That's what I'm hearing about the exit polls. So, yes, we do see the possibility, but ultimately, Melissa, I do not think so. I think it really raises concern and the uncertainty, and markets hate uncertainty, and so it's going to take time, and I think country by country will realize that it will be in their best interest to continue with the EU, but it's going to take time. And over that time, the markets are going to be extremely volatile with a leaning to the downside.
Well, if we saw what happened on Friday, I mean, after the results came up, markets went into complete panic mode. I mean, $2 trillion were wiped off global equity markets on Friday alone. You're saying that this is a knee-jerk reaction. We're not going to be seeing this kind of losses today, this week, in fact?
Well, now it depends. Now, if you look at foreign exchange, yes, you are going to see increased volatility. We're already seeing it in FX and the pound. But in terms of stocks, Melissa, it was a knee-jerk reaction. That's the first reaction. And now the weekend has occurred. I think there's going to be more reflection. From what I'm seeing over here, there is some selling that's going to occur, but it's not across the board. We are seeing stocks that have high yields and real estate investment trusts, which are high yielding, and they have to be because they have to deliver as a dividend up to 90%, at least 90% of their cash flow. So we're seeing some like Con Edison, like the utilities. We are seeing some strength and support in buying, but there has to be a real reason. Particularly, and another factor is companies that are more U.S. Directed rather than international companies that are utilities over here. So it's not yet across the board, and I suspect there will be a flight to very specific groups, very specific areas, depending on how the manager is looking at the demographics and where the expectations are. So, yes, it was a knee-jerk reaction, and typically we've. The other thing, Melissa, we've gone through this type of scenario recently, relatively recently, over the last 5, 10, 15 years, where in the past we haven't, and so the market and investors are getting more used to having to react to extremely the downside. So I suspect that the knee-jerk reaction, there will be some kind of support, some kind of reaction this week, and then it's really once we get beyond this week is when we'll start to see a real separation between the weak stocks and the stronger ones.
What about you, Dodge? I mean, did you have to recalibrate any expectations, any position adjustments you had to do?
Well, we typically do not hold many short positions. We did have a short position in the S&P 500, which we now have lifted. We're now recalibrating. Yes, we are recalibrating. We're looking at defensive sectors and perhaps buying them on a 3 to 4% pullback. We're looking at cyclical industries like materials and industrials. We're expecting a larger pullback, maybe 5 to 7%. We have a big election coming over here, Melissa. After that, regardless of who wins, we'll probably be looking more at infrastructure and defense. We're really looking at diversification, quality, and mainly very plain vanilla stocks at this point. But yes, we took yesterday to sit back and take a look at all the positions and look at them in isolation and trying to calculate, because most of our clients are much longer term in nature, and so pullbacks like this in stocks that are superior management, that are based on the stock market pulling back, not on a change in the fundamentals, Melissa, most of our clients would prefer to hold out and perhaps use a pullback as a buying opportunity. So very specifically, we did recalibrate, but more from a longer-term perspective rather than a pure reaction to the short-term volatility.
Thank you so much. That was Dodge Dorland, Chief Investment Officer of Landor and Fuest Capital Managers in New York.
Thank you for listening to this podcast. To find more great interviews, go to bfm.my or find us on iTunes. BFM 89.9, the business station.